Well, the Bajaj Finance numbers are slightly mixed, I would say. Especially, we definitely need more clarity from the management in terms of the overall asset quality, the rise in the Proforma GNPAs, the one-time write-off that they have done, and overall asset quality. Having said that, the profits also are below 18-hour poll estimates. However, the management has certainly painted a better outlook going ahead, and we will be watching out for more details from the analyst conference call as well. In terms of the numbers, well, the profitability is certainly below 18-hour poll estimates at 1146 crore. We are seeing the net interest income coming in at 4296 crore. It's largely in line, but the margins have come under pressure during the quarter. These are the calculated margins that I'm speaking about, and this is on account of the fact that there has been some amount of interest income reversal during the quarter, and also the company holds high liquidity surplus, which is impacting the margins. In terms of the Proforma NPAs, well, definitely need more clarity as there's a huge rise in terms of the Proforma NPAs. They have the gross NPAs, the Proforma numbers have risen to 2.86% versus a 1.34% in the last quarter. The Proforma net NPA stands at 1.22% versus a 0.56% in the last quarter. Just for the benefit of the viewers, Proforma NPAs are basically those accounts which are not yet classified as NPAs. These are the accounts which were standard as of 31st of August 2020. This is as per the RBI norms as well as per the Supreme Court direction. Also, the management has done a one-time write-off of principal outstanding of 1970 crore and also interest outstanding of 365 crore. The one-time write-off is on account of the COVID-related stress, and management states that they have 800 crore worth of provision overlay on account of COVID-related stress. The AUM on expected lines has declined 1.1% on a YOY basis, and we are seeing the mortgages book growing well, but of course the consumer B2B business has shown a huge amount of degrowth on a YOY basis. The deposit franchisee is good, growing at 18% YOY. The customer franchisee is good. It stands at 46.31 million customers, and they have acquired 2.2 million customers in Q3 itself. They have a strong capital adequacy provision at 28% and liquidity position as well. Speaking in terms of the outlook, while I would say I was not too enthused by the numbers, but the outlook is definitely better there. Management states that in terms of the outlook, this quarter has been marked by granular business recovery. There has been significant improvement in risk metrics, and also they are stating that the company expects core AUM growth to resume to pre-COVID levels by Q4 FY21. Most businesses have started disbursing nearly around 85% of the volumes, with incremental growth being observed every month. Margin profile in all lines of business was steady at the pre-COVID levels other than the mortgage business. From FY22 onwards, the company expects the loan loss and provisions to revert back to pre-COVID levels, which is 160 to 170 bips on an average basis. And in fact, if the recoveries are good according to the management in FY22, they expect lower net loan loss provisions to average assets. They're also expecting the residual credit cost in Q4 at 1,200 to 1,200 to 1250 crore. So all in all, slightly lackluster numbers in terms of the asset quality, but definitely a promising outlook, and we would wait for more clarity from the management coming in from the analyst conference call